All right, we are live for the Friday edition of the Mike and Mario Show. Excited to be back for another week to try kind of unpack a lot of things from this past week, as well as looking ahead. And as of right now, the markets don't look too happy. And as you mentioned before, Mario, the Grinch? Whatever. How you doing, Mario?
Yeah, I'm doing well, thank you. And yeah, and you?
I'm doing good, my friend. It's Friday as always, man. Looking forward to a good weekend. And other than that, getting close to the holiday season, so I'm excited just to be able to unwind a little bit and blow off some steam from 2022, and hopefully wish and pray for a better 2023. But looks like a lot of the indicators aren't pointing to that, so we'll get into that. So yeah, so let's unpack the week a little bit just off the top. So on this side of the water, we had SBF. He got arrested on Monday. That caused a little bit of a little hoorah. And then Tuesday was the CPI figures. A lot of people are overly optimistic that they're trending downward. Markets rallied briefly. Wednesday, 50 basis point hike. Markets respond unfavorably. Here we are Friday. Markets still not too happy with that. So what's been your assessment of the current week thus far?
Yes, I think yeah, the CPI came out lower than expected, and the market actually rallied quite strongly just after the
Mm-hmm.
numbers, and even before the number, there seems to have been a leak.
Yeah.
But I think the Dow was up almost 800 points or so, but then everything fizzled out, and then on Wednesday, the Fed did what it was expected to do. Uh, Yesterday, the ECB and the Bank of England raised rates, and with the exception maybe of the Bank of England, the Fed and the ECB they've remained relatively hawkish, saying that they need to keep raising rates and that they will not stop. And I
Yeah.
think that's why the stock market and even the bond markets have come off. And yeah, it doesn't bode well. And the other thing that I've been hearing more and more is a recession. People talking about
Mhm.
recession, even though we know there was a recession earlier this year, the
Yeah.
first two quarters, even though they don't want to say it was, uh, but technically two consecutive quarters of negative GDP growth is a recession. But now it seems like even the mainstream central
Mhm.
bankers are admitting it, and I think, frankly, it's going to be a recession we have most people who are alive today probably have
Mhm.
never experienced before. And why is that? Well, because I think it's going to surprise people. Most people in the mainstream
Yeah.
economic profession, Wall Street, politicians, think we're going to have a recession that's going to bring down the cost of living, like prices. But I think they're going to be mistaken. And I think you sent me something saying that Goldman Sachs
Yeah.
expects commodities to go up next year. And for once, I agree with them. So yeah, it's going to be, I would say, the mother of all recessions if it doesn't become a
Mhm.
depression.
Yeah. The mother of all recessions. Okay, so the article that I mentioned, I put up here a moment ago about let me see, get it back on the screen here, about the global recession. And so like you've mentioned, we've been talking about recession for quite some time, just because all the indicators, all the things you mentioned. And of course, we got figures out right now showing that everything has pointed to a definite market or economic contraction for sure. We're witnessing that real time. But I think the recession narrative is being allowed just because it's quite obvious and you can't hide it. And as you mentioned beforehand, just the words of a depression. Like, if we were to get to that point, it will be after something breaks and it's obvious. And they have to admit that they either couldn't plan accordingly or they tried their best to tighten. Everything was working fine until. But, will that be in 2023? Because as of now, that 50 basis point hike, they already told us it's going to be a quarter of a hike for February. So they're already setting up the narrative of dialing back now due to economic tightening. So what are your thoughts? The 2023 might be that time frame where something gives.
Yeah, and even right now, there could be things giving, and we only find out about it in a month or two.
Yeah.
Here in the UK, I think even the Bank of England has admitted that we are in a recession. The ECB and the Eurozone, the same thing. But yeah, as I said, there was a recession earlier this year in the US. So it'll
Mhm.
be a double dip one. And if you really want to dissect the numbers, we could argue that since '08 we've been in a recession or depression because the way they calculate GDP, they add government spending, and we've been running budget deficits, not just in the US, but in the UK of more than 2-3%
Yeah.
for 15 years. And GDP has, except with the exception of 2021, where we saw a huge bounce because of the huge drop from the lockdowns,
Yeah.
GDP hasn't really grown more than 2 or 3%. So yeah, this is not going to be good, I think. And I guess as well now it's after the midterm, so they can admit to it.
Very true. Now let's touch on a little bit of the CPI figures that were given to us, and so they're trending down. And so the mainstream narrative is that it peaked in June, 9 point whatever it got up to, whatever I don't even remember at this point, but it peaked in June, and now we're trending downward. And so there's 2 or 3 graphs I want to share with you guys about shocking projections based upon what happened in the 70s. And so I'm not too well versed on the 70s, wasn't around then, but try my best to do a little bit of historical view, analysis. But I want to share with you, and of course, Mario, get your take on this. And we talked a little bit beforehand, but this is one of the little overlays of today's inflation figures in comparison to 1970s. And so as of now, with this downward trajectory, it's being labeled as just the first wave of a
Yeah.
extremely high CPI figures. And if that is the case, whether or not this is somewhat accurate or not, the numbers are still extremely low. If this
Oh,
is still what we're in.
well, the thing is, a lot of you guys watching and you as well, Mike, know about shadow stats
Mm-hmm.
and how they calculated CPI up until 1980. So we actually would be even higher than it was from 72 to 84. So
Right.
yeah, we might drop with this CPI that doesn't count much, and we could go down, to 4 or 3% and then rebound.
Yeah.
But I've read something, and I've seen, you've probably seen it as well, that people have gone through the data historically in the last 300 years. Every
Mm-hmm.
time CPI goes above 5 or 7%, it takes like 10
A
years to get
decade.
back
Yeah.
to 2. So I think the same people who were saying that inflation or CPI was transitory early last year, they're going to be wrong. He
Uh-oh.
administration selling the strategic petroleum reserves, and it's made oil energy prices look lower. But I think food and shelter, like
Mm-hmm.
rents, are still pretty strong. There's still a lot of big components. That's why the CPI in the US looks less than the one in Europe. We had CPI for the Eurozone today was above 10%.
Yeah.
So it's like what they've done with the CPI is like management of perception. It's like putting lipstick on a pig, or like someone that's overweight instead of going on a diet, they do liposuction, and
Mm-hmm.
but then they gain it right back because they start eating again. So yeah, the liposuction is selling the strategic petroleum reserves to make oil look cheaper, I
Mm-hmm.
think.
Mm-hmm. Right, and that's the thing. Like as of right now, we're at what 30-year lows right now, and with the expectations to be able to fill that back up. But what if it doesn't work out the way they want it to? Then how are they going to use dumping oil that's not there to calm down the next little CPI wave?
Mm.
Um,
The
and
other
then
thing as
speaking
well,
of which,
sorry,
just go ahead. I'm
just
sorry.
just to add on the SPR is that countries in the OPEC group, cartel,
Mm-hmm.
they're saying that their infrastructure and their production is getting harder and harder to increase.
Mm-hmm.
So if the US comes in and they'll have to start refilling their strategic petroleum reserves. It could drive prices a lot higher of crude oil.
I would anticipate the prices going up before they go down, and it's all a part of that whole commodity boom where
Mm, yeah.
real world resources will definitely
Mm,
separate themselves from the
yeah.
USD manipulation in
Yeah.
the short term for sure. 2023 might be that year. I'm more than confident that regardless of whatever they try to do, gold and silver in particular will not really they won't be able to hold it off for long. They'll dump down every now and then. Every announcement the Fed does, it'll take a little spill, but it'll trim right back up, just
Yeah.
like it did a moment ago before it slammed
Yeah.
down. So,
And even if the economy is in a recession, demand is down. Uh, investors, there's so much money in the paper assets, and paper assets we look at today. They've had a horrible year,
yeah.
and and despite that, I saw something that saying that fund managers are the least exposed to commodities in years, and I think they're going to be. Yeah, they're going to be wrong-footed, and they're going to say, "Wow, we need to put a little bit of our capital into hard assets, commodities."
Right.
And it doesn't even have to mean that the economy is doing well. It's just a matter of protecting capital, and they're going to realize that 2022, despite the hawkish Fed, the rate rises, commodities are still up about 12%. As per
Right.
the, I think the Bloomberg Commodity Index, I have it here. It's up year to date, actually 13.8%. So figure that one out.
Yeah. Now to piggyback more, I want to show you the last little CPI figure from Tavi, and so he also put a little analysis as to why he believed that is the case. But here's his 3 inflationary waves of the 70s, and we're talking beforehand. We're going to try to overlay the gold on top of this just to mimic the next 10 years, just a 10-year time frame. And this is probably, as you mentioned before, it takes a lot longer than 10 years for things to come back down. And so it's good to say they'll probably never be able to reach their 2% mandate ever again, just because there's going to be some hiccups along the way. But if we were right here coming down on this first wave, 2023, somehow, some way, they continue to slow things down. We may not get down to this low figure this here, but this second wave will definitely be well greater than what we currently experienced this past June. So literally imagine like them admitting to a 17-16% inflation, but then you use inflation hedge, or what's his name, John Williams, and it'd be 20, 30. And so like imagine these waves. If we are at the beginning of this decade here, just coming through the first wave, how much worse things will get as we press through. And could it play out this way?
I think so. I think so, because the era of easy money and credit that we had from the early 80s till 2020, beginning of 2021, let's say, or 2020, where bond yields kept going lower. And I know they're going lower now, but I think now we're on another path. We are on a bond bear market, and credit and money will be much tougher. So yeah, it's going to be not as good. And if you want to put that chart back there, I can tell you what.
Back up here. It's about the Tavi one.
Yeah, the last one you had on. Yeah, I can tell you, like up until like 67, 68, 69, the gold price was fixed at $35 an ounce as per the Bretton Woods agreement. But in 68 was an important year because the major European and North American countries, US, Canada, G7, so to speak, they had something called the London Gold Pool, because the gold price was getting very hard to keep pegged at 35. But in 1968, France said, "Oh, we give up on that because we think the Americans are inflating." So, and then Nixon closed the gold window in 1971, August. And from there, gold went, it was already trading in the international market above 35 probably, but if it went from 35 to, if you put that chart back, it's probably
which one?
The one you just had there.
Yep.
It went from 35 there at the bottom of the first wave to 200 at the top of the second wave.
Right.
So, and then when you had that, so you could argue that it could go, and that was 35. It's almost 6 times. So we could argue that gold, yeah. So, and then it went from 200 down to like 102 there. And then from there, it went all the way up to almost 900. So, but I think gold is going to do, I hope, I don't know, I hope, but I think we could see gold next year, if we, like it did from 71 to 74, we could see gold still go a
Wow.
lot higher.
Yeah.
Eventually, when the second wave comes down, gold could correct, but it will
Mhm.
be a lot higher than it is today. And
Yeah.
then eventually, in the third wave, we could see gold. I mean, levels that we don't really know.
Yeah. Now think about this. So this is the first wave you're talking about. Here's the second
Yeah,
wave. Here's that third wave.
yeah.
And so just imagine like this, 700, 800, whatever. So mind you, there was nowhere near as much debt.
Oh yeah, no derivatives.
It was it's not much of a paper rigging manipulation game. That was just being formed. And here we are now. They've been able to maneuver some things very well up until. So if we were to see some type of waves of this magnitude, it's going to be very uncomfortable for those who don't have something that's stable and constant and that's
Mm.
absorbing all those fake units of currency going out there. So, yeah, I just thought this overlay was just something worth bringing to people's attention, just because
Yeah.
if this plays out even partially the way that it has based upon the past, we ain't seen nothing yet.
Oh yeah.
Nothing yet.
Yeah.
So what I'm seeing in the chat, I'm seeing a lot of people talk about the UK strikes. And so MW says UK 100,000 UK
Yeah.
nurses on strike,
Yeah.
postal strike too.
Yeah. And the other thing we're gonna have from from the 23rd of December till the 31st of December,
Mhm.
we're gonna have a border border workers strike, which means people flying into the UK. There's not going to be any immigration people. They're trying to get the army to do something. It's going to be highly disruptive. Airports and like the border. What these strikes are, they're a symptom of the currency losing value through inflation. Uh, and again, we have the fallacy, especially from mainstream Keynesian economists and politicians, that it's the unions that create inflation, but they're just reacting to the currency debasement. The problem with the nurses is that
Yeah.
they work for the government. The NHS is a government entity, public
Yeah.
sector, and the government is so big now, they spend more than 50% of GDP. So if the nurses want a pay rise, that's going to have to come from more borrowing by the government and more spending by the government. That's going to be inflationary, but it's not really that has caused the inflation. Is the fact that they've been doing QE and deficit spending for almost 15 years, that all that money printing during the lockdowns, that's what ruined everything. And unfortunately, yeah, when the public sector asks for pay rises, it becomes inflationary because the government has to borrow, because a public sector, they don't get paid by the private sector directly. They have to be financed through taxes. And it's one of the reasons why I think it's going to be really tough on the Bank of England. And that's why they're backtracking already. They're talking about maybe rates not going too much higher. And I think that's why the pound dropped so much yesterday.
Yeah. So with all those strikes taking place, ultimately speaking, and I can't confirm this, but I saw a video. I'm not sure if I think you either shared it or I saw it from somebody else where there was actually some agreements that were being formed and worked out amongst the unions, and then I guess the government somehow, some way stepped in and
Oh yeah.
squashed that,
Oh
kind
yeah,
of
they
forcing the
have.
strike.
The RMT, which is the Rail and Maritime Transport
Yeah.
Workers,
Yeah.
they had come to an agreement with the workers. And don't forget, actually, the rail workers, the train drivers, they work for private companies. But the government stepped in and said, no, you have to stop negotiating.
Right. Like, so that shows that it's a
That's
deliberate.
like,
Like they want this.
or no, yeah, or they think that they have to stop these price rises because they think it's inflationary. But and the other thing it shows is that we don't have a free market. When government interferes in the private sector, it's called something that starts with an F, that Mussolini was famous for.
Yeah. So I guess so as the way things stand now, with all the stuff happening in the UK, the start of 2023 for the UK will be very problematic. Like literally, like it could be somewhat of a self-inflicted lockdown type of thing if things come to a halt. If with all
I think,
the services.
yeah, I don't think it's even the new year. We're already in it. We are already in a deep hole.
Yeah.
Our economy is like in a recession. We've got strikes. We got higher prices. It's going to get worse. And I saw today as well, or yesterday, that the government is going to keep financing a lot of stuff. Because they've got a cap for energy for consumers for until I think 2024, and for businesses they're supposed to lift that cap next March, but they're going to continue to help all companies in the UK with their energy bills. Well, that's going to be more and more deficit spending. It's really yeah,
It's a
it's
tragedy. So, so I mean, it's bad in the UK, but let's keep it moving here. So here in the US, Uncle Sam is always finding a way to
spend
add
a few
funds to the war
bucks.
machine. And so close to almost $1 trillion. So I'll just put this close to $1 trillion. But U.S. Senate passes record $858 billion defensive act, and we're broke. We're tapped out. All central banks or all governments are already beyond broke, but yet they're still finding ways to pump out currency, which will be problematic in the near future. But just a little bit here, it says U.S. Senate passed legislation on Thursday, and it says $45 billion more than proposed by President Biden, rescinding the military's mandate. So they took away the mandate for the military.
Yeah,
Okay, sure.
but what I read as well is that they were asking, I think the Republicans asked for that, and they wanted also to compensate a lot of the military people who were sacked because of that. Right? They wanted to pay them back, and they didn't agree on that though. So they can give money to Ukraine and Taiwan, but they can't compensate the military personnel that they sacked, I think, unfairly.
Right. So here's fiscal authorizes 858, and military spending includes a 4.6 pay increase for troops, funding for purchase of weapons, ships, and aircraft to support for Taiwan as it faces aggression from China, and for Ukraine. So they're funding Taiwan and Ukraine, as you mentioned.
Yeah. The
With
thing is, I
unlimited
don't
funds.
see any aggression from China with Taiwan.
Right.
We saw the local elections in Taiwan recently, and the party that's friendly to China and a one China policy won. So what's this aggression towards Taiwan from China? I don't see it. It said there as well that Biden is expected to sign that very quickly. I wonder if he can still sign anything.
Yeah, they managed somehow to have a photo out with him signing
Is that
something.
like, does he just do an X?
I have no clue, man. All right, let's keep it going. What else we got? We got some other topics worth touching on.
Oh
What do
yeah,
you want to hit
maybe
next?
treasury holdings,
Oh,
like
okay. Let
how
me.
China and Japan are selling
Yeah,
more and more treasuries.
yeah. Here we go. I got that right here. Okay.
There you go. So Japan here from September to October, they sold 42 billion treasuries. If you look at January, they started at 1.3 trillion. So and then China, I mean, they sold about 24 trillion. 24 billion, sorry. So yeah, treasury hold, I think as well, we saw the president of China, Xi Jinping, went to Saudi Arabia recently for 4 days, and
Yeah.
they've done an agreement to deal with all the Gulf nations in yuan. So I think other nations are going to start doing that, dealing with China in the yuan. And it's not going to happen overnight, but it's happening already, as we've seen by those numbers.
Yeah.
More and more countries are going to need less treasuries. And what that means is that there's going to have to be someone out there who will have to buy those treasuries. And if there isn't, market prices of treasuries will go down and yields will go up to attract buyers. So that means higher rates, less economic activity. And yeah, I think it's very important that, and coupled with the China Saudi rapprochement, and that's really important.
Yeah. So it's going to be a continual bleed off of them trying to get rid of debt without making it look so obvious, as if like it's an outright selling of those treasuries. And of course, so the biggest question is they're slowly but surely bleeding off treasuries, and are they looking to, I guess, invest in their those, like, so a lot of that used to be, I think, for the the Silk Road initiative and all the funding. And
Yeah, I think they're still doing that.
Yeah.
and also maybe infrastructure projects in Africa.
Hmm.
I saw that China helped South Sudan build a motorway or highway, like 300-kilometer highway in South Sudan.
Yeah.
Doesn't seem like much, but that country is quite poor. I think they don't even have a central bank.
Right.
So China is actually there helping, and I think they want to be involved in other countries. Some people will call it colonialism, but I spoke this summer to a Uber driver who was originally from Kenya, and he said in Africa they actually welcome the Russians and the Chinese because he says they invest more in the infrastructure,
Mhm.
unlike the Westerners who go there just to get the resources.
Yeah. They go there to loot and steal. And also, some of the selling of those treasuries to support their own currencies. And so,
Yeah,
like, as
Japan especially, yeah, and
yeah,
maybe in China even because the yuan has recovered recently, but the dollar had been quite strong up and it got up to about like 7.30,
mhm.
uh, the $1 7.30 yuan. Now it's below 7.
Yeah. So low blood pressure says, how many treasuries do you own? And first thought was, how much ever is in my bank account? That's the only thing close to a treasury,
Yeah,
or a dollar
yeah,
denominated debt instrument that I own is what's in the bank.
yeah. That's the only one I have in terms of here in the UK Treasury is the
Yeah.
currency you keep in the bank. But
Mhm.
that's another reason. Unless you want to finance Washington D.C., don't buy treasury. Don't buy treasuries.
Right.
Not just because I think they're going to go down in price, but because it's like helping your enemy, in my opinion, because governments become so big. The bigger government becomes, the less freedom in the individual has.
Yeah. And speaking of which, another nation worth touching on, out of China. And so I guess due to the contraction of their economy, they decided to lessen things to appease, their people from revolting. But it's going to, so I wonder with the whole zero COVID policy, will they pivot or
Yeah,
whatever, or that's still going to be something they try to stick
yeah.
with while managing a crumbling economy from what we're seeing from the outside? What are you thinking?
Well, I read this article from the FT. It came out today,
Hmm.
and it looks really worrying, doesn't it? Beijing death toll mounts. But
Yeah.
if you really read it, it's a few people in the hospital that are dying of the complications related to COVID.
Yeah.
And the Chinese officials are not really reporting these deaths as sea deaths.
Mhm.
I'm trying to keep that that word out,
Yeah.
but I think it's more the FT trying to scaremonger people because China opened up, didn't they? The restrictions, they lifted them
Yeah.
last week or the week before. So we'll have to see. That's another uncertainty is China, and China is important because of supply chains. Uh, we still buy a lot of stuff from there, not
Yeah.
just finished products, but also intermediate products that are used for making finished products here or in the U.S.
Yeah. Yeah. Now, one of the
Rolf
more,
Steiner is look at what Rolf Steiner said.
what is that?
Russian flag is the flag of freedom and liberty in Africa.
Because the American flag against the U.S. and America. Yeah, like so, all the nations that the U.S. has basically colonized, terrorized, raped, and everything in between, they're becoming they're budding up easily. And one,
Yeah.
everybody's applying for the BRICS Plus.
The
It's
thing
like,
is, America was in Afghanistan for 20 years. They
mhm,
spent, I don't know, $1 trillion there, and Afghanistan is a basket case.
mhm,
But the military industrial complex, the General Dynamics and the Lockheeds
yeah,
and the Halliburtons, they've done really well.
yeah. And so we'll get ready to take some questions. And I see a question here about Ray Dalio's book. I have not read that, but I wanted to, just of course, I want to share my 2 cents on Donald Trump, his announcement. It was a twofold announcement, but the majority of the publicity was focused on this NFT collection, which sold out in hours. And so I'm not sure if you had a chance to watch his other video, the one that did not get any press, but it's basically him talking about when he's reelected in 24, he has a freedom of speech act or something like that he's going to roll out. and he basically gave his playbook as to how he's going to take away all the left's attacks on free speech and censorship and stuff like that, and just do away with it. And it was real cocky in a sense, but I'm thinking like it's such a distraction because 2024, in a sense, that election is so far off. And the chance of him actually being able to get a second term is not possible. Like they're going to make sure they're going to do everything to make sure he doesn't see the light of day in the White House ever again, in my opinion.
I would say that Ron DeSantis has a much better chance of getting elected as president, not Donald Trump. And I saw recently that DeSantis has opened like a kind of a tribunal investigation for the state of Florida for the those people who produce that juice.
Yeah.
So I think that's good. I think that's a good thing. And unfortunately, unfortunately for Trump, I think he's counting his chickens before they hatch there.
And just from that video alone, it's about 8-minute video, and he's talking as if like it's already written in stone. Like my second term, when I get back in the first day, I'm thinking like just it's too far in the future to even begin to think about that.
It's possible, but I think DeSantis will give him a run for his money,
especially based upon outcome of this investigation. Like if this gets some traction, shines more light on how dangerous all that stuff is.
Because 45 actually pushed for those things.
It was all his signature, whether he was duped or not.
And he was like, so I'm sorry, people. he pushed for the PFZI thing.
Yeah, I gotta speak in code language these days. All right, let's get to some questions or thoughts or ideas out there. So feel free to share your 2 cents on things. What caught your attention? What did we not touch on? Things worth bringing to the forefront. I'm curious to see what you guys are having in your mind. Mario, let me know if you see any questions out there.
Yeah, I'm looking.
One about UK Financial. So I didn't get a chance to read it, but it says, have either of you read Ray Dalio's book, The Changing World Order? It seems to be a good predictor of the current and future times. I have not read it, but from the video snippets I've seen, and also knowing well before that book was released, that Ray Dalio has already shifted towards the East. Like, I think he already has plans on helping and being a part of this great reset to where he's telling us something that he's a part of. So I don't trust him one bit, even though what he's predicting is quite obvious. But
Ray Dalio, I think this is nothing new about what's happening now. If you've read The Fourth Turning, which is a very good book. And the other thing about Ray Dalio, he's the guy who founded Bridgewater Associates, which is one of the biggest hedge funds out there. And a lot of people think that back in 2019, when we had the repo crisis and the Fed had to bail out the repo market, one of the hedge funds that was in trouble was Bridgewater Associates. So, but I haven't read the book. He is a thinker, I guess, Ray Dalio, but it's not a book I've read. Right. Maybe I'll look into it.
Yeah, I have not. And so James says LIBOR, SOFR, which I haven't even dived into lately at all. So I'm not sure, Mario, have you touched on it?
Yeah, well, LIBOR is the London Interbank Offered Rate, which is a reference rate based on the dollar trading outside the United States. It's called the euro dollar. It's any dollar that's trading outside US. And there's a big LIBOR scandal during the 2008 crisis, and it got a really bad reputation. So they're trying to wean off the international bankers from the LIBOR reference rate. Yeah. And it's a bit of a problem because it's like making Americans think in kilometers instead of miles.
Yeah.
You're used to miles, and if you change to kilometers, you could have a lot of accidents. So that's the thing. You could have a lot of accidents, and LIBOR is used a lot for the derivatives market, for setting mortgage rates and everything. So, and it was pushed by the BIS Basel III initiative. and it's not something that they can enforce that much. But yeah, it could be a problem. And the derivatives market we know is huge,
Yeah.
and anything can cause a huge accident there.
Right. Good point there. Good point. Good. What else we got here? Arizona is a state of emergency. So yeah, that whole election situation in Maricopa County, 59% of the Dominion polls went offline. You know, at the opening peak hours of voting. So yeah, so it's an investigation over there. It has been talked about by no other Republican
Yeah,
whatsoever in the country.
I didn't
So
know
more
there was a
shenanigans.
state of. I didn't know there was a state of emergency in Arizona.
I don't know if it's official or not, but I'm assuming they could be referring to that because
Mm,
there's I think it's going before a judge. There's some type of court ruling or some type of presentation in
mm.
front of a judge next week about that. So we'll find out what comes from it. But mainstream media won't touch it. What else we got here? Where did Bankman hide those billions? He dished them out to politicians.
Well, and I think Alameda Resources, the hedge fund they had, lost a lot of money, and that's where it went. They
Mhm.
lost it. It's just gone to other people, and probably also to Ukraine.
Yeah, and it's probably intertwined within that whole tether debacle that's soon to
Yeah,
unravel.
and
Like once
maybe
that
the
tether peg crap
yeah,
unravels,
maybe the big guy got 10% as well.
I wouldn't be surprised. Here's one from Sam. It says, "Hey, gentlemen, what's the logic or theory of what part Amazon will play once CBDCs are introduced?" Hmm. Amazon. That's a different angle. As far as what role they'll play, I know that as far as the U.S. intelligence agencies, they are the primary host for all the servers and things like that. So I don't know how that'll play in the CBD side of thing, but they're definitely in bed with the government. But you know, I don't know
Well,
about CBDCs.
CBDC is supposed to be the Federal Reserve.
Right.
I don't know if Amazon is involved with the Fed's cloud system.
That could be, yeah, they could host some stuff because I mean, for what they're trying to pull off with this digital dollar project, like I'd imagine it's going to take a lot of computing power to be able to control 300 plus million people in real time, being able to program and
Yeah,
stop and delete, add, monitor, track, and trace. So yeah, it's going to take some
I,
power.
I think though it will be a long time until paper cash notes are gotten rid of.
Yeah,
So it will run parallel, I guess.
yeah. What else we got? 70% of U.S. weapons were resold went to, yeah, yeah. I've seen so many stories about how U.S. Ammunition and
Yeah,
stuff like that is being sold in
I
Africa. And
I'm in contact with a viewer who lives near north of Washington D.C.
mhm,
And he told me that it's like two different worlds over there. Like the government buildings and everything is like they're booming and building and brand new, and
mhm,
then you go to a neighborhood and everything's falling apart.
mhm,
So that's a symptom of all that, those trillions going or billions going into the military industrial complex. It
yeah,
hurt, it helps a few people, but there's no help for the public. I'm not saying that I believe in socialism,
mhm,
but when you suck the capital out of the public through inflation, that's what it does.
yeah, yeah. That is 100% true. What else we got here? Since plan movement hasn't. Let me see. I don't see any more questions. We got 38 minutes. What else? So looking ahead, we have a couple weeks left in December, and doesn't appear to be any type of hope coming for the markets. And so, do you figure we're going into 2023 in a very red fashion, and we'll expect more of that? Any type of relief rallies that could be coming for the foreseeable future, based upon whatever might be out there.
Well, as I look at the markets right now, the Dow is down another almost 500 points. And in the new year, I would expect maybe because that's what fund managers and people do, investors, they'll probably buy because it's the beginning of the year.
Hmm.
And but I think this year is going to be remembered as a really bad year because the whole concept of buying stocks and diversifying into bonds, it's been broken because
Yeah.
both stocks and bonds are going to have a really bad year, and unless something magical happens here in the last few days of trading
Mhm.
days. So yeah, I don't know. It's difficult to say. Yeah, we could continue going lower in the stock market. I think it's going to be a tough next few years for investors, especially in the made in the stuff that's been going up since '09.
Mhm.
I think like the Nasdaq went up 16 times from bottom to high.
Mhm.
So it's a huge. I guess it's the everything, not everything, but it's the paper bubble
Right.
unwinding. And
Housing bubble as
housing,
well.
yeah, yeah. Even though housing, a house is solid, but it's more financial because of
Mhm.
mortgage rates. But yeah, I think commodities are going to continue to do well.
Yeah. Yeah. So that's always a reminder to get your weight up, people. That's basically
Oh,
the level of importance ever before.
there's a question here, Mike, from
What we
over
got
here. Have you guys ever wondered what
over
your
here.
ESG score is? No, over here. I've got no interest in that because I don't believe in this ESG agenda, and I've
Sure.
noticed that a lot of U.S. states like Texas and Florida
Mhm.
are like getting away from it. They're like
Right.
they've stopped dealing with people that funds like BlackRock that
Right.
are into ESG, and I think it's something that's gonna not be around because uh, it doesn't make sense. Corporations. I think even Jamie Dimon said he didn't agree with it. In the end of the day, corporations and businesses are there to make a profit,
Mhm.
and and all these ESG things do is put a drag on their balance, on their bottom line.
Yeah. And that goes right into your carbon footprint.
Yeah, that's right.
Yeah, so like I saw your video about the carbon footprint with the banking sector. We haven't. I mean, thank God we haven't had none of that here, from what I've
Yeah,
seen. In
yeah,
Canada,
yeah.
I've seen some.
I took a screenshot of that when I got that.
Uh-huh.
It's like, wow, that's
Yeah, like I'm not interested, buddy. But then again, it's one of the things where it's going to be forced upon you no matter what, because you won't be able to log into your bank account unless you
uh
say yes or no or something in the future. Like when they make it mandatory, because at some point they're not going to have it optional where you can opt out. They're going to say
yeah,
in order to
well,
use our services, and then that's where
yeah,
you either rally together and just start removing funds, and they have to drop that or not.
yeah.
What else we got here? It says persistence of resistance says could tax incentives cause end of year sell off? Tax incentives,
We're already getting a sell-off.
right? And
What tax incentive would be you get basically if you record a loss, you can
mhm.
deduct that from your income, I guess. So he's saying, they're going to keep selling more so they can deduct their losses from. Yeah, it's
Yeah,
possible.
and especially I know it's common for sure in the crypto space because
Hmm.
because all the losses that people have been taking this year. So traders are definitely going to have to do something. What else we got here? That's will ranking filing system ESG DBTQ. All right, so we have 43 minutes. I don't see no other questions out there. If you don't, well, it's gonna be a good weekend, man. Any plans, Mario? You gonna unwind or hang out?
Uh,
I know the
Not
weather kind of
really.
makes it restrictive.
Not really this weekend, no. But next weekend will be Christmas Eve and Christmas. We're gonna be at a friend's house. Looking
Yeah.
forward to that, but just taking it easy.
Yeah, that's good. Same here, man. Family, food, and fun. That's what I'm gonna try to
Yeah.
do and start off the new year. And I'm planning on taking. I'm gonna attempt to try to take more trips this upcoming year, somehow, some way, just to get some sun and relax my mind because I've been beyond bombarded with too much negative news. Now I need to shake some stuff up, Mario. I got to figure it out. But anyway,
Mm.
well, everybody, be blessed, be safe, enjoy your weekend, and back at it next week if we can. And just hey, stay blessed, man. Stay prayed up. Peace.